Oh my. We are live for another day. Good morning, everyone from, well, basically around the world. It is quite amazing to know that I'm in Palm Desert, California, and I am talking to people from all over America, Canada, the UK, Europe. I'm talking to people in the Caribbean, South America, some in Africa, Asia, and way down under. Welcome all of you from wherever you are watching me live or on a rerun. Thank you. It's your buddy Uncle Bruce, Stock Markets with Bruce here, where we try to explain what's going on in the stock market, kind of in a plain English kind of way. It's the best thing we can do. Also, what we do a lot of here is we talk quite a bit about and with viewers who are writing stock options and bringing in enhanced revenues into their accounts. In some cases, quite substantial revenues are coming into people's hands through this method of writing options. A lot of these viewers of this channel are quite happy about that. Welcome, all of you. Those of you who are not quite aware or you haven't heard the word, we're having another class that I will be handling. Jennifer and I will be on the air on April the 8th. April, yeah, that's right, April the 8th. That's not this Saturday, but next Saturday. This is Thursday, so in 9 days from now, we will be on the air, 2 o'clock Eastern Time, Saturday, April the 8th, for class number 15, lesson 15 on. In this particular case, the class is all about advanced poor man covered call writing and rollover strategies. For many of you out there, you know what writing poor man covered call options are. For a lot of you, you've heard about it, but you're not quite sure. The good news is there are classes available already on my website, stockmarketswithbruce.ca. There are classes already available that you can go to. There's the website there. And you can watch how poor man covered call options work, how you can write a poor man covered call option. You could actually probably write a poor man covered call on a stock like GameStop. You could probably write a poor man covered call on a using less than $2,000 to do so easily. Yeah, without a doubt. If you want to write a poor man covered call on Cisco, Pfizer, HPQ, Hewlett Packard Enterprises, and we're talking some pretty serious companies here, you can write poor man covered calls on those shares easily with less than $2,000, probably less than $1,500, maybe even less than $1,200 US in your possession. But keep in mind that certain firms that offer you the opportunity to do poor man covered call writing, they might require a minimum $2,000 account or a $5,000 account or a $10,000 account. Each brokerage firm has its own rules. That I can't answer to. But there are viewers on this channel here right now and are always here who have quit their day jobs in the last year, many in the last 6 months, and have gone into poor man covered call writing and option writing as their means of saying goodbye to their bosses and bringing income into their lives from the options market rather than from working in a warehouse or in a cubicle or going to an office downtown or whatever your gig was at one point in time. This changes lives. If you know how it works, and that's the key here, if you can understand the entire options market to get a handle on it, then you'll quickly figure out how you fit in on it and how you can make it work for you. Many of you out there are pretty good at and pretty familiar with the stock market. You kind of understand. You buy a stock at $50 and you sell it at $55 and you make $5 a share. Ooh, simple as flip one share, flip 10, flip 100, flip 1,000 shares. Invest in shares over the years, and slowly buy into, say, Apple. You buy a quarter of a share every month or two or whatever, and you slowly build up a position of Apple shares. And over years, they go up in value. You're looking at your account going, hey, the cost of all this Apple stock cost me $2,800 in the last 3 years, and it's worth $3,500. I'm up $700 from my $2,800 investment. Nice going. If that's the case, beautiful. Same on any other stock. Option writers are in a whole different ballgame. Option writers will own stock in Apple or any other stock, and then they will offer their stock for sale to someone else for a set period of time for a premium upfront. And it's a wonderful thing. It's cash in your door right now that you can use any way you want to use it, and just leave it there if you like. And you end up buying back the call you wrote, the contract you sold. You end up buying it back for basically less money. And that's it. That's all there's to it. Write a contract for a price up here and buy it back for a price down here. And the difference is it's your money. If it's $1 a share differential, you write a call option for $5 and buy it back for $4. That's $100 per contract, because each contract is made up of 100 shares. Simple. Nothing complicated about that. Did you write one call? Okay, you sold a call for 400, bought it for 300. You wrote 10 of them. You sold 10 at a time. You sold 10 calls for $400 each. That's $4,000 in, and you gave back $3,000 and kept $1,000 for yourself. Nice. $1,000 helps. Did you do it on 25 contracts? Ooh, $2,500 profit on 2,500. How about 50 contracts? There's $5,000. If you can do that once a month, write 50 calls for $4, buy them back for $3, and do that once a month. That's $5,000 a month to you. Can you live on $5,000 a month? Does that replace your paycheck net? How does that work? For some of you it does, some of you it doesn't. It all depends. There's opportunity in them there hills. Anyway, class number 15 is April the 8th. So if you want to understand all what's going on with poor man covered calls, I suggest you head to this website today. And I suggest that you get yourself over there. If you land on my homepage, that's what you're going to see. And if you hit the tab that says classes on the upper right, that is what you're going to see. And then you're going to see class number 1 and 2 and 3 and 4 and 5 and 6. They're all there. Don't worry. You want to learn how to make money in the option market. You may want to get over to watch them all, but number 11 is Poor Man Covered Call Writing Strategies to Quit Your Day Job. There's can I get any more specific than that? Option rollover strategies for calls and puts, stink bid, stink offer, psychology in the markets, how to maximize profits from writing stock options. These are the classes you've got to get to. But I got to tell you, you start at number 1 and 2 and 3 and 4, because these classes here will give you the foundation of knowledge to help you understand what poor man covered calls are like. By the time you get to a lesson 11, 12, 13, and 14, you have had 20 to 25 hours of instruction already come at you. Easy lessons to understand. It's done in front of a live audience. Jennifer is the moderator. That's my Jennifer Aniston lookalike wife. And she takes questions from the floor that you can be part of if you want to be part of number 15. And then she interrupts me as I blab away in front of my whiteboard and says, there are people asking questions about what you just said. And then I'll answer that, clarify it, and continue on. If you want to be part of the classroom, April the 8th, send me a donation through PayPal. It's right here. There it goes. You'll find that down below. Make a payment, donation of $150 for your seat in the class, and send me a private email at brucefarmer@hotmail.com, and you will then let me know, Bruce, I just sent you $150 for my lesson. Make sure, I just want to make sure here I am. And this is my email. I'd like you to send the link to the live link on the morning of the class. So we go live at 2:00 Eastern. I will be sending out links about 15 minutes before the class begins, plus or minus 5-10 minutes. So a bunch of you will get links around 20-25 minutes before, up until about 10 minutes before, because you sent me an email saying, hey, Bruce, I sent you $150. Here's my email address. Please send it to me here. Looking forward to it. We have these are really fun. These classes go over very well. And folks get a real kick out of the whole experience. If you want to enhance your retirement, you want to speed up your goodbye from your boss, maybe this class is for you. Definitely more and more of my viewers are entering poor man cover call trading territory. They have figured out the leverage that it works for them, and we will exploit that a lot in the class coming up. So there you are. That's the story about that. Thank you all. Today we're going to talk about SOFI and everything else. Can SOFI break $6 today? We're at 582 in the pre-market right now. We're up 7 cents. It could be today. As a matter of fact, SOFI could break 6 anytime. It could also break 7 anytime. I mean, it could break 6 today and 7 today. This stock is capable of this. There will come a day, and I don't know what that day is, but there will come a day where this stock will make a move up, never to come back down again. And it will break away from these 5 neighborhoods, 6 neighborhoods, and will reach levels we haven't seen in a while and keep climbing. And the reason that is going to happen is because of public awareness of just how prolific this bank is becoming, how much of a winner this bank is becoming. I was just saying earlier on my pre-alert show for the Gold Bagel members of this channel, the first bank failure that took place a few weeks ago had to do with a run on the bank, and the bank owned treasury notes for depositors. They in effect had treasury notes in their portfolio that they had invested in using clients' money, depositors' money. Nothing illegal with that. The problem with the strategy, though, was that the bank was not able to handle a run of withdrawals without selling some of their treasuries to cover their depositors' withdrawals. Now, normally this isn't a big deal because treasuries are liquid 24/7 around the world. They're easy to liquidate. That's not the issue. The issue was, what were they getting for their treasuries? That's been the problem. And that became the problem at Silicon Valley Bank when they had to sell treasuries at a loss of about 20% on their cost, because many of the treasuries were purchased a year ago, 6 months ago, 8 months ago, 2 years ago, when rates were nothing. Interest rates were zero. And whatever price the bank bought the treasuries for, the prices have dropped since, because the higher interest rates go, the lower existing bond prices get. And if you bought a bond at 95 cents on the dollar, which gives you an effective return of, say, 1.5% on your money for the next 5 years, but in 2 or 3 months' time, interest rates are now 3 or 4 or 5%. That bond will not trade at 95 anymore. It'll trade at a lower level for someone else to buy, who then will get a 4% yield on their money. So the treasury or the bond prices fluctuate based on interest rates and perceptions of interest rates. And of course, the street out there, up until 2 weeks ago, the thinking was, we're going to 6% interest rates. The Fed's going to keep raising rates. And so these T-bills and these bonds kept falling and falling, along with all the other bonds out there, all the corporate bonds, every other country's bonds. World bond markets dropped in value across the board. And that has, in some cases, affected you at home, where you have seen either emails come to you or a little envelope in the mail come to you telling you how your 401k is doing, or how your mutual fund is doing, or how your ETFs are doing. You're getting reports from your asset managers, the folks that are supposedly your wealth advisors. These folks are sending you statements, and you're looking at all the different funds that you have money in, and you realize, oh my God, I got $100,000 inside a money market fund, or a bond fund, or a high yield interest rate fund. Well, these are all bonds, and your funds for the last year have dropped dramatically, and the market hasn't done well either, the stock market, but your bonds are getting crushed. Silicon Valley had to sell bonds at a loss. And as they were selling bonds at a loss, they had to book their bonds at a lower value, which meant the bank was insolvent. It had more money owed to its depositors than cash available right now from its portfolio. That gap had to be made up with investors in the bank's money, the shareholders. And they had already poured billions into the bank, and that had already been eaten up. And now the bank was technically upside down. And the Fed didn't come in to rescue the bank. The Fed came in and took over the bank. And all executives who were running the bank are out of jobs. All shareholders who own stock in the bank are holding stock that's worthless. And the Fed now had to basically guarantee the value of all depositors' deposits so that the run on the bank would essentially stop dead in its tracks, which it pretty well did. And now there's been an orderly liquidation of funds coming out of what's left of that bank. That was the first wave of the banking problem, the first wave. The second wave that we're talking about now, and this is why SoFi is going to do so well. The second wave that's going on is the fact that banks are okay if they're into bonds and T-bills, because the Fed has said to all banks, whatever you paid for your US bonds, we at the Fed will lend you dollar for dollar against your bonds. We're guaranteeing the end value of your bonds, and we'll lend you the money up front. If you need any, if you need money to handle a run on your bank, we'll take care of you. That's fine. But not all banks are into just bonds. They're into all kinds of stuff. There are banks that are deep into car loans. There are banks that are deep into crypto financing. There are banks that are deep into the next shoe to drop, and that is commercial real estate. That is the next area of concern. So if you're working in an office tower in downtown Houston, Denver, or LA, or Frisco, or Miami, or you're working in an office tower in New York, wherever you are, Toronto, London, Dusseldorf, wherever, you might have noticed that throughout your downtown area, wherever you are, surely in America and Canada, it's definitely obvious, a whole bunch of for lease signs are everywhere. There's all kinds of signs for lease. Footage, 1,000 square feet to 20,000 square feet, available everywhere. In every office tower you can imagine, almost everyone has vacancies. The industrial parks, these campuses, these huge acres upon acres of campuses out in the burbs or in the light industrial areas of cities, they have buildings that are 2, 3, 4, 5 stories tall, 8 stories tall. They have vacancies out there because of all the layoffs that happened and all of the folks who stayed home during the pandemic. Not all have come back. And corporate America, corporate Canada, corporate everywhere they're very attuned to the economy, and they're the first outfits to pull back. Governments are the last. So a private company that had 500 employees in a building sent everybody home during the pandemic and worked from home, and they slowly pared down their workforce to the point where the workforce is 400 people large, only 100 people in the head office, and 300 working from home remotely. And now they're saying to half of those folks, you can come on back to the office 4 days a week, 3 days a week, whatever it is. They don't need space for 500 people. They need space for 300 people. Plenty of room for 300. They're going to let space go. When their lease comes up, with about a year to go, their lease comes up soon. The landlord and the tenants start talking. The landlord wants to know what's in your future. What's your game plan? Are you expanding your company? Do you need more space? Are you shrinking your space? If so, how much less do you need? Because the landlord wants to know a year from now, what am I renting and who am I renting it to? because the landlord may have your neighbor on the same floor you are at wants to expand while you want to contract. So there'll be a little adjustment to the space. There'll be contractors brought in to make that work, all coordinated between the landlord and the tenants. But in some cases, tenants have 5 floors of office buildings and they're going down to 2 floors. This is a problem for landlords because they know they're going to have 3 floors of vacant space added to whatever vacancies they've got. And the rents are dropping and the costs are rising and they're having trouble making their mortgage payments. This is the issue that's worrying people who have a lot of money in banks that specialize in commercial lending. This is what we're talking about. So if the thinking is that the 29th largest bank in America, the 48th largest bank in America, or 30 of the largest 70 banks in the United States are overexposed in commercial real estate because those bonds have dropped dramatically in value, not because of interest rates, that's part of it. But in reality, the reason the bonds are way down in value is because the bondholders want out because they're worried that maybe the borrower can't make the interest payment and the principal payment on time anymore. Or a year from now, they feel these office towers in downtown, wherever, they're going to be even more vacant than they are now. And that could spell problems for lenders. And lenders, in some cases, are banks and private pools of capital and ETFs and mutual funds and pension funds. But if banks are facing a liquidity crunch and they don't have enough bonds in their possession from the US government that they can borrow on, they're going to have to sell other bonds they have. Now, those could be bonds in private real estate, home loans, like the 2008 crisis we talked about. Could be bonds that are made up of car loans, a whole package of those together. We could be talking about commercial real estate. We could be talking about cruise ship loans. We could be talking about airline loans, airplane loans. We could be talking about hotel and resorts. We could be talking about all kinds of lending that banks are supposed to do. The banks are lenders. This is how they make money. They take your money and put it in the bank. You need some of that money to exist on. And the rest of that capital, they put to work lending it out to other people for money, for expense, for a cost. And they generate more in fees than they spend to make it. And they make a profit while holding your money for you and honoring your checks and deposits and withdrawals and all that good stuff. Well, in the old days, banks had pretty well a lot of cash on hand, and they were very frugal with their lending. They were really picky about their lending. And then in the 2000s, we heard that banks would do loans and then sell those loans off and just get them off their books. And they would still collect your payment from you, but they would send the money that was collected, less a handling fee, to the end buyer of that note. And that would be Wall Street. Somewhere on Wall Street, you're sending that money to. So your local Bank of Denver is hauling in $5 million a month in payments, and they're sending $4.8 million of it out to Wall Street because those guys bought all their loans. They had $5 million in loans, and they're keeping a couple $100,000 a month as handling fees to do all this business. They're a bank. That's what they want to be doing. And then they lend another $5 million and sell those loans off, and they lend out another $5 million and sell those loans off. As long as they keep offloading the loans to someone else who takes the risk, they will keep re-lending money. The problem is when Wall Street goes, whoops, we got upside down bonds here. They don't buy a debt anymore. And when they don't buy debt, the banks have to hold debt that they've issued, and then they cut back offering debt to potential borrowers. But the bank is heavy in loans, and the bank now is looking at, we've always carried billions of our own debt, but we've also sold off billions in debt. And now we're heavy on all kinds of debt here, some of which is commercial real estate. And there's the issue with a potential problem. If you can't liquidate commercial real estate debt at par, you're going to liquidate it at a loss. And if you liquidate it at a loss, you have to declare on your books that your bank's portfolio of real estate loans are down 20, 30, 40% in value. And that could mean hundreds of millions of dollars per bank or billions per bank of losses that are carried on the books. And that takes away equity, the bank's equity. And if it's too far and there's a run on the bank now, people are worried about how much exposure these banks have in commercial real estate. Then you have a run on the banks, and all of a sudden they have a liquidity problem and they have to be bailed out by the Fed. And that means huge losses all over the place. But worse off than that, unfortunately, what's even worse is the entire freezing up of the banking system. No one can get a loan for anything, no matter what your credit rating is. That becomes the big problem. And that's what happened and was happening and about to take place globally in 2007, 8, and 9. The financial crisis, where no matter how good your credit was, you can't get a loan because your banker is afraid to lend even you money. They are not interested in lending you money. There's the issue, because they are used to selling your loan to somebody else. Your credit rating is so good, they can sell your loan quickly and then lend to somebody else and keep lending and keep lending. When that freezes up, the whole economy freezes up. And there's an issue that we're watching here. Anyway, SOFI is a winner. And here's why. SOFI is not known as a commercial real estate lender. They're not known for office tower financing. That's not their specialty. SOFI's specialty is dealing with retail clients and businesses, small businesses. SOFI is not the banker for Amazon. SOFI is not the banker for Federal Express or Disney or IBM. SOFI is the banker for IBM's employees. SOFI is the lender for strip mall, mom and pop shops, up and coming small companies, new high-tech firms like in Silicon Valley. SOFI is the banker of choice for 35 and unders for sure, even 40 and unders, definitely. Anyone who's used to doing this, using this for their life, to talk to people, to text people, to email people, to write options on these, trade stocks on these are the people that are SOFI's clients. Good news, this is a growing demographic. Huge, massive. It is the growth demographic, period, for finance. Digital, handheld, the ability to trade. SOFI is exactly what 30-year-olds, 35-year-olds, 40-year-olds are looking for. They want instant access to their funds, and they don't want to have to walk into a bank branch, park their car somewhere on the street or in the bank's parking lot to go in and withdraw $50 from their savings account. They want to be able to bank online 24/7, pay their bills, invest their monies, withdraw monies, transfer monies, all they want at the push of a button. On this, whether they're sitting on a toilet, sitting on a lazy boy, sitting at the dining table, at a red light, driving, whatever. Rightly or wrongly, that's the world we live in. SOFI is offering savings of about 4% on your money. So if you've got a savings account or a checking account at SOFI, your money's earning money. 40% of Americans today with savings accounts are getting less than 1% interest. 40% of Americans, 40%. This is millions and millions and millions. Tens of millions of people are getting nothing for their money at their bank. Even now, they're getting nothing on their money. SOFI is offering a wonderful reward if you want to shift over there. And it's working. It's been working for quarter after quarter after quarter. The question is not when they're making money as a corporate entity. We think it's already happening. It might already be happening as I speak to you. It's possible that the quarter we're in right now is going so well for SOFI in the growth of the company that they've already turned the corner into profitability. It's possible that's already happening. I would bet you that between this quarter and next quarter, I think it's a done deal that they're going to become cash flow and earnings positive because of the economics of scale, the economies of scale. They've grown to such a large point in how many clients they have. And every time they add a new client, and it's all click, click, click in here, it's cheap for them to add a new client now to their business. Much cheaper now than it was a year ago, 2 years ago. Very cheap because of how many millions they have already. And so the new clientele, the new members of this entity are taking this company to another level. And it will not stop because there is no limit to how fast and far these guys can grow. They could become 10 times the size they are now easily in the next 4 to 5 years. Easily. But does it have to? No, but they could. Will they grow 10, 15, 20% a year in size and grow 30, 40, 50% in revenue? Yeah, very, very possible. Very possible. Guaranteed? No. Likely? Yeah, likely. Very likely. They're growing. And banks that have brick and mortar locations have big problems. The cost of operating a brick and mortar bank with inflation at 8% or what have you is incredibly expensive. Taxes are going up as far as property taxes and business taxes. Those are rising. Inflationary costs on everything to do with a physical location of a bank. I mean, just changing the light bulbs in the bank's building cost more money this year than last year. There's so many expenses that a physical location has that a virtual location doesn't have. This is the SOFI advantage. These guys can make profits on way fewer dollars, where Bank of America needs trillions of dollars to manage, hundreds of billions of dollars to finance and work with to eke out a profit. These guys here can do it with millions of dollars, not billions. But they're working with billions, and they're going to go into tens of billions. They're going to become very big. This realization is coming to Wall Street. It's coming to SoFi stock. Every day, more people find this out. Not on this channel. 186 are here, and you already know most of you already know this story, or you know most of this story, or some of this is new to you as far as commercial real estate end of it goes. While other banks falter and other banks are having trouble holding on to their depositors, SoFi is growing, and SoFi's depositor base is getting larger, and their client base is getting bigger, and their services are fitting the demands of the client perfectly. There is zero interest among 20 to 30-year-old graduates of college, high school, university, going into their first, second jobs, whatever. There is zero interest for these people to find a bank branch downtown to do their banking at in person. Zero. The entire generation coming after all of us, that's my kids and your kids and your grandkids, are all banking on with these. This is the normal for banking for kids and for 20-somethings, 30-somethings, 40-somethings. This is it right here. And if you're a player in the market, you're an investor, you're an option writer, you are using this. You're using your laptop, your iPad, your phone. You want an institution that is capable. Now, it's true. Bank of America lets you use one of these. So does Wells Fargo. They do. The problem is that those guys are trying to do both at the same time. They're trying to offer online banking while having physical locations. Their profitability is hampered by their expenses, which are rising dramatically. They're cutting staff everywhere. They're cutting branches everywhere. They're shrinking. These banks are shrinking and trying to go into digital. SoFi doesn't have to shrink to get bigger. SoFi is all digital, and they just go that direction. And by offering upwards of 4% interest on cash deposits and offering up to $2 million of insurance for your accounts versus $250,000 of FDIC insurance, they are attracting a lot of interested parties into their system. So I can see where husband and wife each have a bank account. They're each covered for $2 million. Hello, there's $4 million of protection there. Open an account for the 3 children. There's another $6 million of protection. Open an account for the business. Open 2 accounts for the business. Open 4 accounts for the business. You have $2 million per account. Get it? It's 4, 6, 8, 10, 20 million in protection, 25, 30 million in protection. How many accounts do you want? 2 million per, and I suppose, and I don't think I'm guessing here too wildly. I suspect that they're offering even more insurance if you want it. You can get additional insurance, but that's between the client and the bank, isn't it? SoFi is going to be a very profitable corporation because their expenses are set, their overheads are set. They're a digital entity and they have their fingers in many different pies at the same time to generate revenue. This is not a one-trick pony. This is not a car loan company. People thought this was a student loan company. That's what they thought this company was 5 years ago. Oh, they just do student loans, and that's why it works so well, because everything was on this for students. See, well, many students have graduated in those years, and of course the moratorium and everything else. But those folks are still using SoFi through this, and they have jobs now, and they have credit cards now, and they have savings accounts now, and they're paying all their bills through here now. They're using this with SoFi for everything because they started with SoFi. They're going to stay with SoFi. They have SoFi credit cards, SoFi debit cards. They can use a debit card at a retail location, go out to see a movie, or use the phone, pay with the phone, whatever they want. It's the way they want it. And that's the way it's being delivered by SoFi to these guys. This is why they are kicking butt out there with regard to how many clients they're attracting. The insurance thing is a nice add-on, and so is the interest payable on savings, especially the fact that 40%, I'll repeat this, 40% of Americans with savings accounts are getting less than 1% interest on their money. 40%. They're shopping. Some of those folks are aggressively shopping for a better deal because they can't get any money out of their bank. And they're going, these guys are so eager to nail me for fees. Every time I write a check, if I want to do a service here, I'll withdraw a couple of bucks from my ATM, they nail me with a handling fee. Why don't I go to SoFi and get paid with my money sitting there? I'll have my money make me some damn money, and that'll cover any fees I run into. Hello. Yeah, exactly. And if you can get 3.5%, 4% interest from SoFi, why would you not get that? Why wouldn't you take that? You're crazy not to. Yeah, you got $1 million burning a hole in your pocket, and you get 3.5% on it. That's $35,000 a year. Not quite $3,000 a month. $100 a day in interest is what you'll be paid if you've got $1 million or so in the bank with SoFi. $100 a day, 7 days a week. You don't have to do anything for that, and it's insured. Hello? What? I can do $1 million for me and my wife? That's $200 a day in interest that we're bringing in. We don't have to. We don't have to think about that. Yeah, that's what I'm talking about. They're attracting not just the small client. They're attracting medium and upper middle class clients. Doctors and lawyers and professionals who have cash flows are going, why don't I have a SoFi account? I'll keep my Wells Fargo account. Yeah, I got a mortgage to those guys, and I did that 5 years ago. And yeah. But I'm going to also have this SoFi account too, and they're going to realize the convenience of SoFi very quickly, and they're just going to basically stop using Wells Fargo, and they're going to stop using Bank of America. They're going to stop using Chase. They're going to go over here, and so the realization will happen to the market at large. People and analysts will begin to write up SoFi in a far more enlightened way. And investors will go, wait a minute, I can buy into this bank at less than $10 a share. I can buy into these guys. I mean, come on. This is great. If SoFi is about to tell the world, and I don't know when this is happening, and I don't know how it's going to happen. I'm curious as all get up. But is it going to come out that one morning we join each other here, and I'm talking to you, and all of a sudden the stock just pops because someone wrote something somewhere that got picked up and it's going viral? SoFi is making money. They have turned the corner to profitability. Well, this changes everything because now analysts will no longer talk about how many new clients they're adding as their first story. The first headline or the first paragraph of SoFi will not be about how many deposits they brought in, or Noto bought more stock. The headline in the first paragraph will talk about profits, estimates, how much money they expect to make this quarter, next quarter, estimates going forward a year from now, 2 years from now, 3 years from now will start coming out. And these will be adjusted every week accordingly as things keep becoming more clear. These guys are generating revenue. There will be a point where analysts will say every time they add 1 million clients to their group, they will add so many pennies a share per year in profits to the company. There's going to be a correlation somehow. This is coming. This is going to happen. That is when the analysts will start coming up with stuff like the company's stock is trading at 60 times earnings this second right now. But a year from now, the stock price today is trading at 18 times earnings. 2 years from now, it's trading at 5 times earnings. The forward PE multiple guessing game will kick in with SOFI. And that is where analysts will come out and say, fair value for this company is 15 times earnings. 3 years from now, we estimate earnings will be this much per share times 15 times that number, coming up with this trading range of between $45 and $65 a share. That's what you're going to start to get on SOFI. That's the future. I don't know if that's today, later this afternoon, next week sometime, a month from now, 3 months from now, but this is the future of GameStop. The prediction of where the stock is going to go is going to be predicated on how much money are they making. Then can we put together PE multiple expectations and estimates. That's the game that's going to happen to SOFI and its shares. And its shareholders will be delighted because the shareholders are going to go, 2 years from now, it's $40 stock. It's $5.80 today. I'll wait. What am I doing for the next 24 months with my money? I could put my money into SOFI Bank and get 3.5% interest. Yes. Or I could put a portion of my money into SOFI stock and watch it go up 7 times as much in 2 years. I'll make 700% return on my money. I like this game. Yeah, I like this game. That's why Noto, the CEO of SOFI, is buying every share he can afford to buy with his paychecks. The guy gets paid and he buys stock with it. He gets paid, he buys stock. He's buying his own company shares multiple times a year, and he has to file reports about it. And he does. He files reports that he's buying his own company stock. The last purchase was $1 million worth. You tell me how many other CEOs you've heard about on the stock market out there, publicly traded companies. How many CEOs have bought $1 million of their stock in the last 3 months? Anyone? Tim Cook, he hasn't bought any Apple stock. Schultz at Starbucks, I don't think he's buying any of his stock. Zuckerberg, he's not buying any of his stock. Who's buying stock in their companies and making filing reports? Mr. Noto at SOFI, and he's throwing in every nickel he can because he knows, he absolutely is aware of just what this means. Every dollar he's putting into SOFI now, you have to understand that he himself has got to be looking at a minimum 10-time return, if not more, because how long is Mr. Noto going to be involved with this corporation? A lot longer than a year or two. Another decade? What is SOFI's prospects 10 years from now? If you would have talked to the head of Amazon 10 years ago, back in 2013, about the prospects of Amazon over the next decade, he would have happily told you how well he felt the company was going to do. Well, the same thing with Noto. Noto is looking at SOFI going, well, look what we've done in 2 years. Look at just 2 years what we've done, going public and doing this reverse takeover and raising all this cash and getting our own chart. We're a charter bank now. We were totally different than what we are today 2 years ago. 10 years from now, just watch out. Get out of the way. You're going to be steamrolled. This thing is on its way. And that's where I'm thinking he's figuring $100 a share. That's a minimum. Now, maybe there's some splits in the way, maybe not. I don't know. But he's thinking $100 a share. I can see him thinking in his mind 20 to 1. The $1 million I just put into the company today is going to be worth $20 million in a decade from now. And it'll grow from there, and leverage from there dramatically. I mean, it goes 10% a year after that. He's got 20 million turning into 24 million, turning into 29 million, turning into 35 million. I mean, he's thinking that he has to be. Why wouldn't he think that way? He has seen growth happen with his team, dramatic growth. And the developments in the banking sector right now are all leading to further growth for SoFi immediately, accelerated growth. I would be surprised if he's looking at it going, "Oh, geez, I thought we'd have so many billions in the under management by 2026," and now he's going, "No, it looks like 2024 we're going to have that much money." We're flying way faster than we thought we were because of the demise of other banks, the difficulties of other banks, and this isn't over yet. And that's what I'm getting at. There are trillions of dollars shifting into different areas, and a certain number of billions are coming into SoFi, not trillions, but billions. This is the good news for you as shareholders of SoFi. You don't need $1 trillion coming into SoFi to make SoFi 10% more valuable. As SoFi attracts $10 billion of additional cash this year, additional deposits, this is a profound impact on the bottom line of that company. It is profound. And this is what I'm getting at. The minute that the street senses, oh my God, SoFi is green, making money, more money will come into the bank even faster because people want to be on the winner. They want to be in the winner. And this is what these guys are doing. Winning begats winning. Look at the Boston Bruins this year. Winning begats winning. There you go. Anyway, there's the story. We are going to be trading in 11 minutes here. And I like what I see on SoFi. Yeah, I kind of like what I see there. Pretty cool bean stuff. What is going to happen with GameStop today? We're up 12 cents, I think, right now on the pre-market, 22.58. SoFi is 5.84, by the way, up 9 cents. We're going to find out. We've got a lot of stuff to watch here. Pretty exciting stuff. Thank you all for joining in. By the way, the class, we got a class coming up. If I haven't already mentioned it, I'll mention it every once in a while. The 8th of April, next week, Saturday, not this Saturday, but next Saturday, 2 o'clock Eastern time, 2 o'clock Eastern time, New York time, going live, lesson number 15, all about poor man cover call, advanced trading strategies. We're going to cover a whole bunch of stuff there. You guys who are doing poor man cover calls, you definitely want to be in that class. Jen will be the moderator, and we'll be doing, it'll be at least 2 hours, at least. We've got stuff to cover. I'm excited about it. You're going to get a lot of info. Now, if you're in the class on the 8th, you're a participant. You can then, it'll be just like this. You'll see me here with a whiteboard somewhere around here, and you'll be commenting over here like you always do. Jen will be handling the comments and telling me there's a question coming up, same kind of question. I'll address that. After the class is over, Emily, my editor, will edit the class and we'll get it posted onto the website. And then all of you who are in the class will get a copy of that completed class, the edited version, which you can rewatch anytime you want. And those of you who can't make the class, inexcusably can't make the class, you can then acquire the class off of the website, just like always. And so there you go. Okay, so you can always do that. So let me know if you'd like to be in the class. You would like to be part of the group, to be part of the show. You need to make a donation to our PayPal account, which is right here. That should be down below in the description underneath this video. Make a PayPal donation there, $150 US, and then send me an email here to brucefarmer@hotmail.com saying, Bruce, I just sent you $150 to get into the class. This is the email I want you to send the link to. So you're going to send me an email and say, here's my email link. So when you link me into the live class by invitation, here's the email address I want you to send it to. That's why I ask you to send me a private email so I know where to send the link to. Because if you make a payment with PayPal, I don't always get your email address. And there are times I get an email address from PayPal, but it's not the email you want me to use to send you the link you want to get. Some of you have business accounts and other kinds of stuff, and I send out links and you guys don't show up, and then you wonder what happened, and this is what is going on. So from experience, I say make the donation to PayPal and send me a private email, and we'll set you up. Okay? Looking forward to the class next week, Saturday at 2 o'clock Eastern time in the afternoon. Looking forward to having you all come by. It should be a good time. All right, everybody. Fabulous stuff. Thank you. Welcome one, welcome all to the channel today. 7 minutes until we go live. Thank you, all of you who are here. Thank you to all the lurkers today who are saying hi to us. The lurkers who are hitting the thumbs ups button, which I know many of you do automatically. I so appreciate it. Please consider unlurking yourself and becoming a member of the channel if possible. Thank you to all of you who have joined this channel lately as new members of this channel, particularly those who are becoming Gold Bagel members. Thank you for that commitment to the channel. We did a Gold Bagel member primetime show last night, 8 o'clock Eastern. Went very well. Those of you who are Gold Bagel members who could not make the live broadcast, you can watch the rerun anytime you want. You have access to it. Those of you who are just lurking about and thinking of becoming members, you get to use those coveted knee emojis. You also get to comment here live during market hours and be part of that show as a Gold Bagel member Wednesday nights. Thank you all for supporting Stock Markets with Bruce. It is much appreciated. It keeps me on the air, keeps Jennifer and I going, and we thank you so very much for your support. All right, the thumbs ups meter, we love you for this. If you can hit the old thumbs up button, we have 122 already in the bin. We have 244 people watching, 122 thumbs ups, and we always strive for 200 thumbs ups every live show we do in the morning. So if you're able to hit that thumbs up button for me, nail that sucker, and thank you. If you can do that, that would get us a lot closer. We're already at 125 now. Here they come again. Thank you very, very, very much. All right. And what else is going on here? Let's see. What was that? Moose Knuckles, number 45. Uncle Bruce, I've got a meeting that day for the class. Trying to figure out if I have enough time to make it. How will the actual class, how long will it take? I go about 2 hours, sometimes longer. It depends on, how many questions I'm answering. At the end of the day, whatever amount of the class you enjoy, great. If you have to leave early, you leave early. You're going to get a full edited version of the class as an email from me within the week after. So 3, 4, or 5 days after the class is done, the editing is finished, you then get your final version of the class, and now you can watch what you missed or watch the whole thing and refamiliarize yourself with what we talked about. You don't have to worry about being a note taker so much on the day of the class because, again, you're going to get a final version of it, but it's up to you. So if you can hang around for half or 3/4 of the session, great. I can't tell you that it'll be exactly 2 hours and 15 minutes long. Can't say. Sometimes these go 1 hour 45 to 2.5 hours. It depends on how it flows. And so no big deal. But love to have you be part of it. If you'd like to be part of it, you can join this great group of folks that we have here. Fantastic. Anyway, there you go. Let's see what is going on here. Seeing all kinds of comments here from all kinds of different stuff. Welcome everybody to get here. We know ATIP has got issues. We know that about its stock. ATIP has issues with its stock trading under $1. So does Spire. Now Sextera under $1. These three companies have got to make decisions as to how to rectify that. I have the answer. I've had the answer all along, but they have to. They've got to get more investors to follow the stock. It's as simple as that. You've got to create demand for the paper. You've got to be able to sell your story. And these three companies have a good story to sell for investors. They have a really good story, but they're obviously not executing on their plan, are they? Because if they were, their shares wouldn't be under $1 a share, not even close. These companies can trade at a nice premium if the market only knew the upside that these companies really have. And I don't know why there isn't a greater following for all three, other than to guess the main reason: investor relations departments are lacking. And that's the bottom line. If your stock is not performing where your companies are growing and growing and growing and growing, you're getting more clients and more clients, you have a demand for your service, your stock shouldn't be under $1 a share. Just shouldn't. And that's an investor relations issue. And that has to be addressed, and money has to be thrown into that, and it is worth it. But that's just this old man's opinion. I don't get asked these questions by these companies directly. But it's been the same old story for many companies out there who do great work, but no one knows about it. And it's just amazing to me how the same mistake is made by companies from time to time. Others rectify it. They do. Some do rectify it. But boy, I'd sure like to see these three guys talk a lot more. Talk. Okay, there it is. What else is going on? Hi, everybody. Wing Commander, good morning. Looking forward to the next class. Fantastic. And let's see what's going on here. A Bagel Babe, I have been trading cover calls on Ford. Sleepy, out of the money, makes small premiums if the stock is affordable, pays a dividend. They announced big news today, made a good little jump. Way to go. Good calling, Miss Molly. And Blair, number 137, thumbs up. Thank you. We're going to have our bells ringing in 1 minute, courtesy of Larry Titus, I believe. And thank you, Larry, for the ringing of the bells, as always. Appreciate it. And those of you who are here as lurkers, thank you. If you're here as subscribers, thank you. And if you're here as members, thank you. We're going to member-only chat now as we begin to fire up the trading day here and see where we end up today. It should be fun, fun, fun. There we go. 140 thumbs ups. Thank you, guys. They're coming in. Keep them coming. You guys are awesome. It is much appreciated. We are hitting the bells. I think we're just about rolling now. I think we are rolling right now. Way to go, everybody. Welcome to the party, pals. Larry has made the move. We are going. Let's go, says Flint Creek. And hallelujah, says Alberto. The bells have rung and we're here to make money. Giddy up, baby. Yes, you gotta love it. Welcome one and all to the party. Another fun time to be had by all participants. And it's just great to see you all here this morning. Thank you for joining me yet again. We've got the Dow, I believe, up 179 to start the session. See how that plays out. Let's see if I can make this work over there. SOFI 586, 589 on SOFI, up 14 cents. Go, SOFI, go. Mr. Premium of the Options, I am number 141 in your thumbs up meter. Thank you. We've got the Dow up 193, S&P up 26, NASDAQ up 95 points, crude oil up 72 cents so far. Jobless claims rise to a 3-week high of 198,000, but layoffs are extremely low, and that is what's going on there. Not a surprise. Christina, Uncle Bruce, when it comes to the class, can you help me understand if there's value to someone who's trying to come back to closer in option writing? Is someone's coming closer in option writing? Yeah, we'll be talking about rollovers, both directions, no question about it. We're going to be talking about all kinds of other stuff, including rollovers of actual deep in the money calls. So we're going to talk about that. We're going to cover a lot about the deep in the money calls themselves as well. There's a lot to go over here, a number of strategies to go over. But yeah, we'll cover it all. You'll be able to ask questions while I'm live if there's something I'm not covering that you'd like to get an answer on. Auntie Jen will be the moderator, and we'll do the best we can to answer all questions. SoFi is zooming, says Flint Creek. 590, up 15 cents. Giddy up, SoFi. Let's go. I want my viewers to get richer, much, much richer. We're up. GameStop up 15 cents to 22.61. Dow 183, SoFi 590, Tesla 196.18 up 230. Apple's up 102 to 161.79. Unity Software up 64 cents to 29.87. HBQ up 28 to 28.59. First Republic up 33 cents to 14.59. The bank's a little better. Google down 111. Moderna is up 165. Cisco up 43 cents. Pfizer up 19. IBM up 82. Microsoft up 347. ME is up 2 cents. Matterport is up 6 cents. Cyxtera is down 4.3 at the moment. Rocket Lab up 7. SmartRent unchanged. Spire is up a penny. Bed Bath Beyond down 5 cents. Amazon up 130. Home Depot up 178. Netflix up 974. Vanik Semiconductors up 280. Adobe up 260. Goldman up 349. Boeing up 60 cents. Meta Platforms down 15 cents. Royal Caribbean up 61 to 64.76. Over at Target, we're up $2 a share. JP Morgan up 54 cents. Costco up 396. Walmart up 187. Disney up 138. They're fighting off DeSantis with some interesting stuff going on there. NVIDIA up 243. American Airlines up 21 cents to 14.56. And there you have it. Christina saying, you should know by now. I love to ask questions. Karen, Bagel Babe, I own Ford too. I have kept it for the dividend too. I gave up writing on it due to the lack of premiums. There you go. 166 gain on the Dow Jones. Let's get a refresh on the big ass iPad and see if that concurs. There we are. Let's get that fired up here. There we go. The high on the day for SoFi, 593 now. 593 has been the high so far already on SoFi. I have it now around the 587 mark. It's still up nicely. The Dow is up 158. S&P up 25. NASDAQ up 91. This is a half a percentage point for the Dow, 2/3 of a point for S&P, and 3/4 of a percentage point for NASDAQ. That is the story. Oil up 77 cents a barrel to 73.74. Okay, German inflation data came out this morning about an hour or something ago. It was higher, slightly higher, not lower, not good. Europe is definitely looking at another interest rate hike over there to catch up to America. So that will slow things down over there even more, not helping the U.S. markets either. So we have to watch for that. Let's see here. And Hector wants to know, Canadians, what trading platform are you using if you're in Canada? Folks can answer that question from Canada if they like. That would be great. 583 on SoFi, 583.84. Volume now up 9 cents on SoFi, 1.8 million. The lowest 582. It's kind of this neighborhood here. The high of 593 so far on SoFi. That is the deal at the moment. Fintech stocks, fintech banks have been winning since the banking crisis appeared last week before. Just so you know. There you go. All right. Easy to say, isn't it? 22.47 on GameStop, up just a penny at the moment. We opened at 22.68 range. We got up to that almost immediately. We're now 22.38, down 8 on 190,000 shares on GameStop. So the downward trajectory continues and probably will yet on GameStop. I don't see it going to 25.30 for any reason, but I can see 19, 20, 21 as the landing point for GameStop, having reached 27 for just that long last week. 22.41 right now on GameStop, down 5 cents. We got ATIP at 28.7 cents, and that is up 1.6 cents this morning, just below 29. SoFi 583 up 8, Tesla 194.94 up 106, Apple up 76 cents 161.53, Unity up 32, HBQ up 32. The markets are going to have to try to fight the urge to go down right now. The market had a big day yesterday. The question is there going to be a back-to-back winning day, or are some profits and more tentative trading coming in? Could we have a bit of a pullback right now based on the nice pop yesterday? And so that's why the markets don't seem to be going anywhere at the moment. We're up 150 on the Dow, 72 on NASDAQ, and we're 0.46 to 0.58 of a percentage point higher between all three markets here, Dow, S&P, NASDAQ. All right. And let's see what else is going on. Hector, Uncle, please check your emails. I've sent you 2 requests to join the Discord platform. Gracias. I'll do that after the show. You betcha. Those of you who have made donations to PayPal to become part of the class, I will definitely get to your emails after the show. I will get to these notifications and I will get you registered into the class. If you have not yet sent an email to me, please do so if you can, and let me know that you're going to be in the class. I think almost every one of you has, except for maybe one person. And I'm looking for Melissa to give me an email. If you're out there, Melissa, you may want to do that at your leisure. We've got time. I'd love to get that. I'll find you, no question. We're up 4 on Rocket Lab, 7 on SoFi. We're up 14 on GameStop. We're popping again, 22.60 on GameStop. We're up a penny on Matterport, 2 pennies on ME, 23andMe. We're up a penny on Spire. ATIP up 1.3 cents. SmartRent up 5.5. Sextera down 9.8 cents to 55 cents. Unbelievable. Apple up 58, Goldman up 315, Cisco up 30, Tesla up 124, Arc Innovation up 40, Microsoft up 256, Pfizer up 18 cents. We're up 27 on HBQ. We're down 131 on Google today. Amazon up 117. Now these two stocks have kind of met each other, 100, 101 again. Nvidia up 172. Unity up 32 cents at the moment. That's what I see going on here at this moment in time. Welcome all to the party, pals. Nice to have you here. Let's see if I can get this to pop. 22.55 on GameStop. 22.55, 22.56 on GameStop. Interest rates, 10-year US 3.57. That's pretty well unchanged. Not much happening there. On currency, the euro is at 109. That is a higher level than lately. The pound at 123.8. Both currencies climbing in Europe. Asia overnight was not much of a change. A quarter point on the Asia Dow. Nikkei index down 1/3%. In Japan, Hang Seng up 0.5 point. In Europe right now, markets are generally green, 0.75 percentage point for the FTSE. That's London. Germany market up 1%. French market up 1%. Looks like Spain might be up 1%. Italy might be up 1.5%. So we have some general gains over there. In the Americas, USA, Dow up 0.46, S&P up 0.6, NASDAQ up 0.62. Oil up 1% to 73 cents a barrel today at the moment. The U.S. GDP in fourth quarter trimmed again to 2.6% on weaker consumer spending. Headline just came out about the U.S. economy for the fourth quarter. Initially, government said gross domestic product was a 2.9. The estimate was reduced to 2.7 last month, and now it's been lowered again to 2.6. The U.S. could show a similar growth rate in the first 3 months of 2023. Wall Street forecasts show hiring and consumer spending have been stronger than expected, easing words of a potential recession, at least for now. They're saying that the downward revision is a result of consumer spending being much weaker than previously reported. Okay, that's what it is. Exports fell sharply. Revised figures also show. Let's see. That's sort of the latest there. Okay, interesting comments and headlines coming out. GameStop 22.55 up, 22.51 up a nickel, and the markets are kind of flat. We're up, but holding. We're up 150 on the Dow, 25 on S&P, and 83 on NASDAQ, and we're kind of sitting there right now. Bed Bath Beyond stock falls 0.8% after launching a $300 million stock offering program. Yikes, they're liquidating that company for a whole bunch of dough. And if you're going to do a stock offering for $300 million at 75 cents a share, let's assume that's 400 million shares being issued. There are 116 million out there now. What do you think that's going to do to the stock's values? That is going to really liquidate them. They're talking about a 10-for-1 stock split rollback down the road anyway. So they're going to go from 550 million to 55 million, maybe a 10-for-1 rollback. I don't know. Yikes. Just yikes, man. That's what I'm going to say. They could have done a deal. They could have tried to work with Ryan Cohen when the stock was $30 a share. They didn't. And now they're doing what they're doing now at 75 cents. Not great. Is it? No, not really. Okay. Thank you all for being through here. What else is going on here? Let's see. Aurora says to Hector, I'm using Scotia iTrade. It doesn't allow you to do permanent cover calls, so I will look into opening an account with Questrade. Splayer, Uncle Bruce, how is it possible that the lowest bid is $555 and then on the highest ask there's more than a $600 volume at $760? Ask how is there no interest in the lower ask? Splayer, I can't answer that question. It depends on the provider of the quote. I don't know. Hector says to Aurora, thank you. Splayer, or maybe someone else is understanding it. Cyxtera at 55 cents. Sell my house fast, Upper Marlboro. SoFi volume over 2.5 million in 10 minutes. Splayer added now 5 more from Cyxtera, already 20 units an average of 104. It's almost nothing. I'm sure what this is going. I don't know what's going on there. Let's keep an eye on things. Cyxtera is 55.4 last trade that I see on 663,000. And I don't have any specific news today that I can point at anywhere on it. ME is up 2 cents. Matterport up a penny. Rocket Lab up 4. Smart Rent up 5.5. Spire's up 1 penny right now, as we speak. Over at the Dow, we're up 149. GameStop up 14 cents, 22.60. ATIP is up 1.3 cents. SoFi 583 up 8. Tesla up 97 cents. Apple up 64 cents. Unity up 18. And Splayer, there it is. Marcus 152 thumbs up. Bruce from JR. Thank you, JR. Is the way it's where we're going. Okay. Whew, tons going on. Rocket Lab up 6 cents. SoFi up 8. 13 on GameStop. Rock and roll. Okay. Yeah. Got nothing there. Apple up 64. Goldman up 3 1/4. Cisco up 21. Tesla up 161. Microsoft up 220. Pfizer up 9. HPQ up 32. Google down 130. Amazon up 128. Nvidia up $3 and Unity up 44 cents. Okay. There you go. Okay, all right, and over to there. Okay, 22.61. The high of the day on GameStop, 22.68 so far. Volume on GameStop now is it even 200,000 shares? I don't even know. I'm waiting for an update. SoFi 500, 585, 586 now. SoFi climbing again. and it was 1.8 million volume. Now SoFi, we're waiting for that to refresh. My machines are not working very well this morning. They are not cooperating. 1.92 million shares, maybe. Don't know. 583 again, 585 on SoFi. Go, SoFi, go. Break 6 today, and let's move to 7. Thank you very much. There we go. Okay. We have 153 on the thumbs up meter. Thank you, everybody. Appreciate that. JR sent you a new video link. I got it, JR, and it works. Just don't have time to watch it, but thank you. Finally, got it to go, and I'll take a look at that here later today. Appreciate it, JR. GameStop, 316,000 says Sky High Kai. Thank you for that. My devices are not refreshing. I'm not able to get that. We're at 22.52 on GameStop, 22.60 a moment ago, 586 on SoFi, up 11 on SoFi, a 150 gain on the Dow, 25 on S&P, 87 on NASDAQ. High of the day for SoFi, 593. The low, 582. Last at 587 now on SoFi shares. Tesla back to 195.54, up 166 on the day. We're up 74 cents on Apple. Unity up 36 cents. Now GameStop is showing 22.66, so it's showing a 20-cent gain. So we're really jumping here, really are. JR, perfect. Smiling, good stuff. You got it. Great. Okay, I'll be able to catch it later. 586, 587 on SoFi, moving into the higher end of the range barely. Again, it's a slow move so far. There you go. 138 gain on the Dow. We're backing up a bit. The question is, will we have a first half hour of some movement and then we run into resistance, which is going to catch up from yesterday's run up, and now we have a pullback? I don't know. We're up nicely from yesterday to today. It seems. Can we hold this and add to it? That's the question for the big markets as a whole. Oil up only 57 cents now, backing up as well. Okay, everybody. Congratulations, all of you option writers. Hector, neat. That's exactly right. That is exactly what one says. When these markets start to slow up, you start pulling out the knee emojis and wake the market the hell up. What's it going to do? We're up 140 on the Dow. Neat. Here comes the attack right there. What is going on with the Knights of Knee today? Welcome one, welcome all to the show, the channel, the myth, the greatness, the silliness, and the fun. We do what we can with what little we have, is what I say, and I thank you all for being part of the silliness today. It's a silly market sometimes. What can we do? 149 gain on the Dow, doesn't have any drive to it right now. Nothing at all. 22.66 on your GameStop, up 20. SoFi is 584. Tesla 196.28, up 240 now. Apple up 83 cents. Unity up 33. HPQ up 35. Google still down 118. Moderna up $2. Cisco up 21 cents. Pfizer up 15 to 40.40. IBM up 93 cents to 130.64. Microsoft up 222 to 282.73. At le moment, we've got Rocket Lab up 5 to 401. SmartRent up 6.5 cents. Spire up 1.4. Amazon up 144. Home Depot up 240. Netflix up 9.95. Vanik up 3.62. Adobe up 37 cents. Goldman up 2.67. Boeing up 61 cents. Meta down 43. AMC up 7 cents. Ape down a penny. Royal Caribbean up 90. Target up 2.97. JP Morgan up 67 cents. Costco up 3.75. Walmart up $1.50. Disney up 1.51. Nvidia up 2.88. American Airlines up 17 cents. There you go. You know what I noticed yesterday? Something just kind of occurring to me. It was in the afternoon yesterday. Jen and I had some running around to do, and we ended up at Costco here in Rancho Mirage. And we decided that we would go in, grab a bite to eat at their food court, and then pick up a few items and then head off. And it was a very light shopping day. We ended up just getting a couple of hot dogs, and at first we couldn't find a place to sit down. Couldn't find an open table at Costco, and it occurred to me last night today that that's unusual at Rancho Mirage Costco. It might be normal in Costco's with a lower demographic of shopper all around it, but this Costco has a very high demographic of shoppers, generally speaking. Generally, because this is the time of the year the snowbirds are in, and snowbirds are all over Costco all the time. Couldn't find a place to sit down to get a 150 hot dog ingested. We did find one, just as it all worked out. But the time we were there, 10 minutes, kind of looking around, and there were no. A table opened up. It was immediately grabbed by somebody else. I found that interesting. $1.50 hot dog, and $2.70 pizzas and $2.50 sundaes, and I mean, very affordable food at the food court in Costco. No question, it's the deal of deals. That's why they're busy. But I'm noticing more of it lately. More people coming to Costco to eat lately. That's telling. That's telling about the economy. Little things, just little interesting little observations. I wonder about as a Canadian. Hector is saying neat, neat, neat. So is Richard and Bama Babe and Karen. Fabulous. Splair, the big E. Splair. Neat, 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 neat. Robert Benson, if I read right, CYXT annual report states on page 66 that unless they can refinance long-term debt and sell assets, then they will not be able to fund operations in 12 months. And Splair, get in cover another. Splair, Robert, sounds horrible what you found there. And option nomads, neat, neat, neat. Mondo, neat, neat, neat. Robert, I hope I misunderstood what I read. What happens, Robert, is the accounting firms of all publicly traded companies use the CYA approach to sign off on financials. This is boilerplate. This is absolute boilerplate language that is used by certainly growth companies, maybe not IBM, but certainly growth companies. If you can't find financing or you can't attract additional financing or cash flows suffer, then this can happen, the old worst scenario. The company itself has a serious shareholder as a backer. And the company has been trying to reorganize itself as a REIT, as sort of a real estate investment trust kind of a unit, where whatever cash flows come out, whatever profits come out will be paid out in dividends, maybe 80% of whatever profits come out. But what they have to do, I think, is they have to attract lending to pay down debt that they've been carrying, which I believe is being carried by their largest shareholder. This is similar to ATIP. ATIP and Sextera, I think, are both backed by their founders and creators and financed by both. And they've been taken public to attract outside capital, which has been done through the SPACs. But I believe in both cases, they are backstopped by these large entities, but these entities have not been willing to just buy up the stock and carry the market. They're probably encouraging and working with the board of directors of these companies, which they probably have members of on the board, to put business deals together and partnerships together. The problem right now, this second, is there's a global confidence problem in banking. And this is not helping these guys or anybody else. It's not helping Matterport. It's not helping helping medium-sized companies, large companies. No one is benefiting from a banking liquidity and banking worry situation. I mean, nobody wins. This has to be resolved. This whole banking thing has to be resolved quickly, and the Fed and the ECB and other entities are working to that effect. But as I just said on my rant this morning, commercial real estate lending is a problem, and Cyxtera needs to borrow money against their real estate entities. They have 61 data centers around the world to process data with servers. No problem with the servers. No problem with the data. No problem getting customers who want to use these guys and their servers for the data. That's not the problem. The problem is the real estate that the centers are sitting on, the buildings that they're inside of. I think that's the issue. And I believe they will resolve the financing of that, because that is not a reason for the company to go under at all. Not at all. The cash flow coming in from their operations justify them having a building to work out of, 61 as a matter of fact. But will it be an arrangement between another company and this company? How is that going to work out? And is the backer of Cyxtera actively discussing on Cyxtera's behalf a fix to the big issue? And that is a strategic partnership of some kind. I can't tell you. I can't offer you that. It might be contingent on financing to get company 1, 2, and 3 to become one big unit. And there might be a whole bunch of financing involved to negotiate with bankers, bondholders, interested parties. And with the banking thing in turmoil and everyone else with their act together, they're all looking at the bankers going, well, when you get your act together, come back to us so we can make this deal work. That could be it. It could be that simple a deal. But in the meantime, shareholders are suffering from uncertainty, and that's what's going on. Welcome to the stock market.
Because the bank really doesn't want to lend you money until you don't need it.
Well, there's that.
And for them, unfortunately, data centers are expensive buildings. You have computers are very picky, and they need backup and batteries and cooling.
Yeah, I mean,
interstitial floors.
I'm assuming that most of you have never been inside a data server farm before. When I use the word farm, I'm giving you the wrong impression. These buildings are like Fort Knox. Just the computer pad that these systems sit on are unbelievable. These buildings have to be earthquake proof, which means they have to be able to fluctuate with bending earth crusts and stuff. These are big. These buildings are huge, massive, football field sized buildings that one end of the building can move versus the other end from an earthquake, a tremor, weather systems. The buildings themselves are reinforced. The climate systems are impeccable. The dust control is unbelievable. You got a lot of techs in there wearing bodysuits with masks. I mean, these are clean rooms in some cases.
There can be no static.
The
air conditioning, the battery backup. Most of the time, if your electricity goes out, it can take 3 to 5 seconds for your generator to kick in. While computers don't like it 3 to 5 seconds.
No.
It has to be an automatic thing.
Has to be an automatic.
Very expensive buildings.
Yeah, that's exactly right. Richard Carlin, I just picked up more CYXT at 52. Splair, let's spread the word in a couple of days on Discord. Save up Cyxtera, similar to Hertz. Splair, but first it would be healthy if our gang can catch it in the 40s. Sorry, I meant on Reddit. DQ, late. I'm 158. Thank you, DQ. Robert, Bruce, would you say Cyxtera is a steal under $1? Well, you know, if the stock goes to $2 in a month from now, bargain of all time, right? It goes to $5 a year from now, bargain of all time. I can't predict second to second what's going to happen in this market. It is so twitchy. It's shoot first, ask questions later. It's kind of like sell first, and then we'll figure out what's going on. And that's what's happening on Cyxtera. It's down 15 cents to 50 cents. Never seen it down here before. I just do not believe the company's going out of business. There's just no way. Sales are $700 million in revenues.
Yeah, it seems totally illogical that a company with that kind of revenue can be killed by its stock.
Yeah. I mean, it's stupid. It's just silly. But I can't I can't, give you a reason to have you plow in there. I'm not a promoter of the stock. I'm just showing you telling you what I know. What I do know is this. Right now, the company is valued market cap at $89 million. All right. That's a joke. All right.
And it brings in how much revenue a year?
Yeah. I'm just gonna go into financials here. There we go. Sales revenue on 2022, 746 million. Sales revenue 2021, 703 million. Sales revenue. That's not profits. That's gross revenue.
Yeah.
These guys generate a lot of cash flow. All right. Yes, cost of goods are up there, and there's depreciation, amortization, expenses, and they book losses. I get all of that. I don't doubt any of it. But I really believe that these guys have what's the word I'm looking for?
They're viable.
They're viable as a business, but they need to get their financial house in order with regards to probably their long-term debt and how they're structuring their long-term debt.
It highlights the difference between the company's story and the shares story.
Yeah, right. Cash on hand, $65 million as of 2022. Again, that's the year-end numbers.
Yeah.
Their current assets, 131 million, showing at the moment. Current asset. Total assets, $3 billion. Total assets, $3 billion. Property, plant, and equipment, $2.7 billion. And it's operating with 700 million cash flow. Like there's something here. There's a real business here. Their total liabilities, 2.6 billion, which would be long-term debt and leases, lease obligations. A lot of this is accounting, legalese, and so on and so forth. But that's the bottom line. Total equity of the company, shareholder equity, 384 million. According to their last results, financial results. So it's capitalized at 89 million right now in the open market. Their actual capitalization is 384 million, according to their financials. Now, the financials are last year's. Things can change in a year, I understand. But Cyxtera has not stopped doing data processing. They do data processing for governments. They have really juicy long-term contracts. They know what they're doing, but I think their issue is the ultimate refinancing of their entire structure with lease obligations and equipment, plant, and so on. And I don't know what it's requiring. Is it a bond offering or something? But with the banks in turmoil right now, no one's getting anything done. This is why markets. I keep telling you guys not to fear the upside of the stock market as a whole, because the markets are going nowhere with this banking stuff going on. You might think the banking crisis is over because they took care of that Silicon Valley thing and then that Signature Bank in New York, and that we're all done now. We're not all done now. Another article came out this morning about Deutsche Bank. I talked about Deutsche Bank for one day last week, and then I haven't had to mention it. Deutsche Bank's name came up again this morning in another article to do with the unregulated derivatives market that is also creating havoc amongst bankers, because bankers are having difficulty marking to market the value of derivatives trades because there's nowhere to go to verify it. There's nowhere to go to see how big this market is, how liquid it is, illiquid it is. It's all deregulated. The investment bankers, the Wall Street boys, the Frankfurt guys, the London guys, the Milan people, the Tokyo guys, the Hong Kongers, Shanghaiers, all these financial business, they don't want it regulated. They don't want to have to report their numbers to regulators. They just want to do business between themselves and let the chips fall where they may. The problem is chips are falling where they may. And Deutsche Bank is going, we don't know what our exposure is to the derivatives. We know what we've lent out. We know that. We don't know what the value of these derivatives really are to know whether we're upside down on our loans or not. Or What we also aren't aware of is we have borrowers that borrowed money for projects and factories and everything else. We don't know what exposure they have to derivatives that could sink them and then sink our loans. Indirectly, we're exposed. This is why it's a nightmare, an unregulated nightmare, and people don't know where they stand. You're in an ocean, you're floating, yes, you don't know where the nearest island is. You're out in the middle of nowhere. And this is what's happening with more and more bankers. And Sextera and ATIP and Spire and Peloton and name all the other companies that are trying to grow and become something are going to bankers and bondholders and the investment bankers, and they're all going, we can't do anything for you right now. We have some issues here. We have some cloudiness in our horizon. We can't figure out where we're at. This is not good. And yet the market is up 103 right now on the Dow. It's up 103, although it's falling from that start this morning. Jen, how are you?
I'm good. How are you?
I'm having fun. I'm having fun every day trying to explain in plain English the crap that is going on out there. The unbelievable crap. We're down a dime on the GameStop, by the way. We're down a dime now. Games Sextera. This is the mystery stock. We're at 50 odd cents a share here, 49.87. The low of the day, 300 something thousand traded. I would say that if you can average yourself down and get some here, I would do so. Yes, but be prepared you might have to wait a little while for a recovery. On the other hand, there may be a 20 cent, 50 cent, $1 bounce in a month, and you'll go, wow, I'm a genius. I'm a god of investing. Boy, am I glad I did that move. But if it sits at 35 to 55 for the next month or two, you might be kicking yourself going, I shouldn't have done that. But on the other hand, the evidence is there that this company is real. They're very real. The question is, can they figure out this ultimate reorganization to enhance shareholder value? And believe me, the insiders of this company and the majority of the backers of this company, they want the stock to go up. They need the stock to trade at $10 a share to be whole, to be made whole. So they too are not happy themselves. But until the company can definitively come out with a press release saying, we've just done this, 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 and this. We now have clarity for the next 5 years. We know exactly what our expenses are for our debts. We know our obligations. We know this, we know that. Now we can move forward with our business. Until that moment, they're going, we don't know, because our backers don't know. And that's the problem. It's not a Sextera problem. It's a market problem, finance problem. That's what it is. Robert, 157 thumbs up. Thank you. Those computers generate heat. Also, the air conditioning bills must be astronomical. It costs a lot of money to run these centers. That's why they can ask top dollar for their services. Your corporation with all your sensitive information inside server farms, they have to work 24/7 perfectly. That's why corporations pay dearly for that, because they can't afford to have those in their offices. This is the thing about a larger corporation. You get to a certain larger size, you don't have computers in the office. No, you have them at server farms, secure places with unbelievable security, physical and cyber, and unbelievable physical security as far as atmospheric.
Much more than your office.
Oh, God, yeah. Power reliability, on-site techs 24/7. It's incredible. It's like Fort Knox in there. You cannot just show up at a place like this and go, hi, can I look around? They don't give tours, all right? Go to Google and try to find photos of server farms. There are very few. There's stock photos, but you're not going to see live in-house video of server farms. These are secure, especially those who handle defense contract work, government work, and that's what Sextera does. Sextera handles data processing for countries, including businesses. That's why they're not going under.
I'll leave you to your rant.
I'm ranting. I'm trying to do it. All right, Jen. Thank you so much. Good morning, Jen from John. Double D. I've been in the near North Dallas city, but I've been in one north. I think that's what or it's a city block or whatever. Maintenance for cooling electrical stuff is really hard work, especially with a little bit of dust in the air. Double D, they use millions to swamp coolers. They use millions for that. Cyxtera Tech was acquired in May 2020 by a private consortium led by BC Partners and Medina Capital, Longview Asset Management, Kuwait Investment Authority, and Public Sector Pension Investment Board. Brian, Aurora, you need to apply for level 3 trading on Poor My Cover Call on Questrade, and you need a margin account. I personally like Questrade. Just make sure you are factoring in the fees, as they're not cheap. Splitter. That's why I mentioned the strategy for sure. It's a bargain compared to last year, but it's wise not to jump into like a train would disappear in a couple of minutes. Robert, you are the best, Bruce. I really like like you saying it as you see it. I really appreciate your work. I always feel I get good answers by questions. Thank you, Robert. Cindy B, 162. Good morning, everybody. Robert, yesterday's headline on CVT, Cyxtera launches online self-service capabilities for its global data center platform. Brian, GameStop drop. Isn't it funny? 22.39, by the way. Cheering stocks to go red now. Uncle Bruce, what have you done to our logic? Splair, the long-term genius feeling is always great until you forget to close out in the right time. Well, there you go. Yeah, these entities are not going to disappear. ATIP is not going anywhere. They're going to be in business for years and years and years. It's the question of what will the stock do? That's the question. Of course, that's the question. The only question we care about is what does it do? What is it going to do? Cyxtera, 49.8 down 15 cents. Ridiculous. The drop from $5 to here. Ridiculous. From $12 to here. Ridiculous. But it is. It's the market we're in. Growth stocks are scrambling right now, and that's the fact. There's no getting around it. Spire up 2 cents to 66 cents. Ridiculous. These guys keep adding contracts from NASA, from the National Oceanic Atmospheric Administration, the U.S. government, the UK government, the Canadian government, European agencies. I mean, these guys are legit, really legit. Stocks at 66 cents. How much do you want? It's the market. The markets are fouled up and are not able to value correctly. And I will come back to my other argument. PR, investor relations departments. You have got to put millions into it to get millions out. And you don't, you pay the price. And awareness is everything. We're only up 63 on the Dow, by the way. We're backing up here 45 minutes in the open. We're only up 16 on the S&P. We're up 61 on NASDAQ. 0.19 of a percentage point for the Dow. 1/5 of a point on the Dow. Oil up just 16 cents. Oil is backing off. So this market is slowing up from yesterday's big run and the opening hour. We could have a red day today. We're down 13 on GameStop. 22.33 right now is where we're trading at. The low of the session at 22.30. We're near the low of the day on GameStop on less than 600,000 volume. We have SOFI at 578, up 3 cents. 576 was the low. 593 was the high. And we're at 5.8 million shares traded. There you go. It's not the companies that are having problems. It's the investors that are having problems. And that is a bank-related issue in the long run. And that's it. That's the deal. There you go. Let's see. Brian, I just switched to level 3. I've not written any Poor My Cover calls yet, though. GameStop took that jump last week, and I had no choice but to write some cover calls. Need to liquidate everything and move to margin account. Giddy up. Rock and roll. Here we go. We are 22.35 down 11 on GameStop and 27.1 unchanged on ATIP. SoFi 578 up 3. Tesla up 112. Apple up 101. Unity up 21 cents. HBQ up 27. The First Republic Bank down 2 cents. Google still down 118. Moderna only up 55 cents. Cisco up 18. Pfizer up 8. IBM up 9. Microsoft up 22. We're red on ME, Matterport, Cyxtera, Rocket Lab, all red. Smart Rent up 4.5. Spire up 1.2 cents. Amazon up 143. Home Depot up 164. Netflix up 550. Vanik up 307. Adobe's negative 41 cents. Goldman up 177. Boeing down 35. Meta only up 87 cents. Royal Caribbean holding a 51 cent gain. Target up 277. JP Morgan negative, down 22. Costco only up 118. Walmart up 148. Disney's up 97 cents. Nvidia up 250. American Airlines up 15 cents to 14.50, backing off at the moment. Coinbase up a dime. People were asking me about Coinbase last night at 65.40. I don't know what to make of it. I think they're up against the entire weight of the U.S. government under the SEC. And that's what scares me about Coinbase. But they were a darling of Wall Street 2 years ago, one of the IPO darlings of Wall Street. And people have lost their butts big time on that investment if they were still holding it. But I think a lot of people flipped it. I'm sure we're up 58 on the Dow. We're still holding a gain, but not much. GameStop down 3 at 22.40-ish, low of the day, 22.30. We're up 15 on S&P. We're up 63 on NASDAQ right now. Okay. Wall Street bonuses are dropping as rates rise. Barron's headline says the average is still $177,000 of Wall Street bonuses. Interesting. I got to figure if you're making 250 grand gross, you're getting a 177 bonus, and that is not like the good old days. Those used to be way higher than this. But it sounds like a lot of money when you don't make that kind of money, right? But if you're on Wall Street and you're in a $1 million condo, that's not much of a condo. You're carrying a $700,000 mortgage, and you were hoping to pay it down a couple hundred grand this year after tax. It ain't happening. You got 100 grand after tax. You're not able to make a big down payment, which means your carrying costs are still up there with higher rates. Folks in Wall Street are working hard, trying to get through it. What can I say? What else is going on here? Robert, so an interview. I saw an interview with CEO from Spire. He said, just put your stock away and look at it again in 10 years, and it will put a smile on your face. And there you go. There's the long-term outlook. They know the future. They're going to be part of it. The question is, what about you? How long have you got? And there's the thing. I would love to recommend a stock today that doubles tomorrow. No question. I love doing that, but that's not my specialty. But I like investments in sound, growing corporations, companies that are growing their business. Yeah, then you give them time. And these former SPACs that we follow, they're growing their businesses. They're not declining at all. They are growing their businesses. Anyway, 22.46 on GameStop. We are unchanged. We have now on the thumbs up meter 171. Thank you all for throwing the thumbs ups around. Appreciate it. That is an awful nice thing to see. We have 29 more to go after to make it. We have 13 minutes before the 2-hour mark of this show. Perhaps we can get 200 before the 2-hour mark is hit. Thank you all very much for coming through. The Dow is up 72 now. S&P is up just 18 and NASDAQ up 71. We're just kind of drifting along here where the Dow was as high as 32,905. It's now 32,788. So we've given up 120 points, 115 points from the high of the session to be ahead 70 at the moment. There it is. I kind of wonder if we're going to have a red day, though. I kind of wonder if this market is going to lose steam because we had such a nice gain yesterday, and the banking thing is still there. It's percolating. Nathaniel, I sold an October 20 of 415 the other day. What would you guys think is a good stink bid to close it out, or should I just sit on it for a while? So I'm guessing this is a GameStop October $20 contract. Nathaniel, I'm assuming that's what this is. The stock is now 22.47, 22.46. It's if you have a $20 call written, it's worth 246 book value right now. Yes, he says it is GameStop. I did write a GameStop with a 415 price, so not a bad little premium. What should he buy it back for? October 20. Let's take a look at it. According to my quote machine here, 520 to 590 is what it's at right now. So You're folding your arms, my friend. You are folding your arms, and let it come to you a long way down. Lorraine, number 53, strike 25, Nathaniel Chamberlain. So now you're telling me you've written a $25 October contract that expires October 20. It would help if you give it to me all at one time. It makes it a lot easier to follow for you. The 25s are 350 bid. So good news. You wrote them at 410 and they're 350 bid. So 110, 105. Take a look for a nice fat $3 gain on this deal. You deserve it. And if you wrote a ton of them, way to go. If you wrote one, you wrote one. If you wrote 10, you wrote 10. You wrote 100, you wrote 100. You're going to make money on it. So look for a dollar something. So fold your arms. Assume the position of a winner. Right here. Come on, baby. Come on back to Papa. Mommy and Daddy are waiting for you to come home. Here we go. Giddy up. Love that. All right, everybody. Good luck to all of you on your option rights. GameStop ain't going anywhere today. It's not going anywhere from what I can see here. SoFi 582. It's trying. SoFi is trying to get to $6. It's up 7 cents on the day at the moment. 582. Come on, SoFi. Take my viewers to the moon. Zeta State, I am number 177. You're only 23 away from that 200 mark on your thumbs up meter. Splair, you all, I'm gone. Wish everybody here an enjoyable, relaxed day tomorrow. And then we're done again with the third month. Crazy how quick this goes. You got that right, my friend. You only go around once. Welcome, my friend. Zeta State, thumbs ups for Bruce. Thank you, everybody. Thank you. Hit those thumbs up on 179 from what I think we have. I think we had 179. We need 21 more. 180 now. 180 thumbs ups are through here. Thank you all for helping out and get us over there. Again, those of you who want to become a little more knowledgeable on how to write calls, especially on deep in the money call options, the poor man covered call strategy, I invite you to join us for class number 15, lesson 15 on April the 8th, not this Saturday, next Saturday, 2 o'clock Eastern time, live. You can be in the class and join us. Auntie Jen will be the moderator of the class. I'll be working away in front of the whiteboard, and you can ask questions on the fly. $150 cost to get in US. That includes an edited version of the class once my editor, Emily, finishes editing it, and you'll get a copy of that as well. So a pretty good deal. Join us if you like. April the 8th, 2 o'clock Eastern time, Saturday, the 8th of April, next week, Saturday. That will be a good time. I'm looking forward to that class. We're going to cover poor man cover call, writing, and rollover strategies in depth. We're going into all kinds of stuff to make you a more aware and smarter option writer on the certainly on the poor man cover call side of things. Those deep in the money calls that you guys are picking off or looking into, we will be talking about all kinds of strategies there, including rollovers of not only those contracts, the deep in the monies, but shifting into other companies from one poor man cover call to another. We're going to talk about strategies there as well. We got stuff to talk about, kids. Join me for that. If you are interested in becoming a self-employed individual and get out from underneath a commitment of a day job or 2 or 3 jobs that you're holding now, perhaps option writing can supplement and replace paychecks that you and your wife or your significant other are already surviving on. And it could be that part of your life is working out of the house and part of your life is working in the house as an option writer. And it might well be that you become a full-time option writer and a part-time employee in evenings or weekends, if that, or working from home as a consultant. A lot of freedom could be coming your way if you understand how poor man covered call writing can be done. The leverage on this is phenomenal. This can speed up your retirement goals and can certainly speed up your ability to get away from a full-time paycheck job that you commute to and back from. Get rid of daycare. Get rid of expenses that are just killing you. There might be some potential here. Amy, have a great day, everybody. And thank you, Uncle Bruce. Thank you, AJ. Christina, I like it when it is unedited. I get to see Antigen drop F-bombs on the air. Christina, laughing out loud from Hector. Christina, I feel like I have a prized possession left over. I got to see Antigen and listen to her cuss. It was amazing. See what happens when you go to the live shows. Oh, they're fun. Those live classes, they're raw. I should wear one of those leather outfits that that Eddie Murphy used to wear. Live and raw comedy routine. I heard an interview on him. He did an interview about those that leather outfit that he wore, that red leather outfit. I think he was talking to Jerry Seinfeld on Comedians in Cars Getting Coffee, and he talked about how he wore that outfit for several takes on that show and a few other times, and eventually the leather outfit got worn out, and he says the last time I saw it was all ripped up. I can't get in it anymore. There's no way I can get in it. Anyway, I think he said he had several of them, and I don't know if one of them ended up in the Smithsonian or something. I don't know where they are. Funny stuff. Anyway, there you go. Join us live April the 8th. I dare you, defy you to join us live Saturday, April the 8th for a live show. Really looking forward to having you join us. Looks like Wing Commander's in. We got you, buddy. You are in to win. We got a good crowd already have committed and more coming. That's good stuff. We have 181 thumbs ups. Beautiful, everybody. Thank you so much for this. It's really helping out. And we have a comment here about how many shares of SOFI have already traded today. We've got SOFI at 584, up 9 cents on 6.8 million shares. That's in 1 hour. So that's a good opening hour for SOFI. GameStop opening hour of 773,000. We're down 3 cents. Not very heavy there. The Dow up 101 points. See, Tesla's up 240. Apple's up 160. Unity up 48. HBQ up 44. Google down 79. Moderna up 125. Cisco up 34. Pfizer up 18. IBM up 32 cents. Microsoft up $2.99. ME down 1.5 cents, just slightly lower. Matterport just off 4 cents. Cyxtera still at 49 cents a share on Cyxtera. 49 cents on the volume of what? 300. Last I saw was 366. Not a lot of volume there going on Cyxtera. I can't get that to refresh. Rocket Lab is up 2. A Smart Rent up 6.5 cents. Spire up 1.6 cents. Amazon up $2. Home Depot up $2. Netflix up 7. Vanik up $4. Adobe up 79 cents. Goldman up $2. Boeing up 29 cents. Meta up 195. So there's a lot of green here. Drew just nibbled 100 Cyxtera at 49 cents. There you go. Stealing it. Stealing 49 cents Cyxtera paper. There you go. Fun stuff. 112 gain on the Dow. We're at the 2-hour mark for this show, and we have thumbs ups now of 183, 17 away from 200. If you're able to hit that thumbs up button, please find it if you can and get us to 200. That would be terrific. Thank you all very, very much. Leveraged my CXT to 86 cents, says Flint Creek. Drew, 500 shares at $2 average, says Drew. Bringing my average way down on Cyxtera. Any kind of recovery, I'm in the green already. That's the strategy. That is the strategy that they employ. Average down and look for a little bump, and you're good to go. And if you can write $3 options and bring in 30, 40, 50 cents to buy more stock, I don't know if you can do that. Just saying. Little bounce up and a little option right. Bingo. I don't know. We've done it before with others. We'll keep an eye. ATIP 27.4 up 0.3 of a penny. SOFI 582 up 7 cents. SOFI 22.44 down a penny. Not going anywhere at this point. over there. Thank you all so much for joining me today. 185 thumbs ups. Those of you on rerun, hit that thumbs up button for us too. Thank you. We'll get us over 200 thumbs up sometime later today. Alrighty, there it is. That's the story. Splair. I'm now at my first 50 on Sextera. I have deeply in the red 10 more on the DEGIR. I don't know what that is, but Splair is into some cheap SOFI, some cheap Sextera right now. There you go. Well, at 49, it's cheap. There's no doubt about that. It's cheap down there. 49 cents. 692,000 traded today. Market cap of $88 million on this company that I think is shareholder valued at $350 million. Might be trading at 1/4 of its actual value right now, possibly. It could possibly be trading at that already. So this is a $2 book value stock trading at 50 cents a share. That's a guess. It's not the definitive for sure, but that is a possible scenario going on right now. So we have a liquidation problem, market liquidation problem, more than a company problem. Anyway, that's it. That's all I can tell you. That's all I can say. I can't say more than that. Join me tomorrow morning as we come back on the air. Thank you, all of you who've been here all this week. Thank you for the show last night, everybody, for the primetime show with Uncle Bruce for Gold Bagel members. And we'll see anything crazy happen. We'll make a video. Anything wild and wacky happens, we'll just go on the air at a moment's notice, without any notice. We'll just go on the air. Keep your eye on these markets and see what they're going to do for you. The Dow is up 112 now, just 108. Don't know if we're going to have an up day on this day or not. We'll watch for that. Interesting stuff. We have decline of 47 billion cubic feet of natural gas supplies, so they're up a little bit today. Oil up 26 cents a barrel. That's all. Just 26 cents a barrel for oil at this point in time. I think I'm going to get a shave today. I think I got to get rid of this ruffian look, clean myself up a little bit. Thank you all so much for joining me today. Hope you're having fun out there. Make a bunch of money writing options and just get richer is my advice to you today. Thank you all so much. Thank you for the kind words, and I look forward to seeing you tomorrow. And of course, next week's class should be a lot of fun. I've got more research to do on that too. All right, guys, that's it. Have a good one for now. Take care. Thank you again for your loyalty to the channel. We'll talk to you real soon. Take care from Palm Desert. Bye for now.